Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to this week's Top Stock Picks of the Week. I'm Tracey Ryniec, and I'm joined at the chairs this week by Sheraz Mian. And we have a retailer and one of the big regional banks. So Sheraz, we're going to start with you with the regional bank, Comerica, which is ticker CMA. I've been watching the banks because I've been a big fan of them for a couple of years now. I've been a little too early over the years, but it seems like they've sold off in 2018, which no one was really expecting, and this could be a buying opportunity in some of them.
I think it is, yeah. I think the big issue with banks in general has been this uncertainty with interest rates. We have been trying to handicap, everybody in the market has been, as to where the yields will go. We thought 2018 finally was it. But the last few weeks show that perhaps it's not given. Yeah. So yes, they have sold off, and they'll probably continue to do that if this interest rate uncertainty continues. Though I personally think that's more of this trade worries and safe haven trade in the treasuries, but who knows? The best you could do is to pick a bank that's well run, that has good operations, that has well-regarded management team, and that's what Comerica is. It's one of the bigger community banks. It's not as big as the super big ones, but it's about 70 billion in assets, about 16 billion in market cap. It's Dallas-based, has operations in Texas, Florida, California, Michigan. And it reports on April 17th, so just around the corner. Very strong earnings picture for Comerica. So the expectation for the March quarter is about 32% earnings growth, about 9% top line, more acceleration in the June quarter. For the full year, mid-30% EPS growth, 5, 6, 7% top line growth, double-digit growth again in 2019. Estimates for 2018 have gone up, as they have gone up for most banks. The combined effect of tax cuts and some movement in interest rates, and that's why Comerica is a rank 2 at present. I've liked it for a while. And the primary reason for that is the good management team, the well-regarded nature of the management team. They're very strong operations, very impressive expense control, and beyond that, then it's the exposure to the broader economy and the interest rates that we briefly touched on. So they have sold off. Comerica has sold off too, along with the broader group. Currently trading around $95. On March, mid-March, March 9th around, when everybody peaked, they peaked too, around 102. So they are up about 10% for the year, which is better than the Zacks Finance Group or the regionals, which are modestly down, about 3-4%. So I think irrespective of what happens to interest rates, if you as a long-term investor need to have a bank or a finance company, you can't go wrong with Comerica. It'll continue to outperform its peer group based on the attributes we listed. It has returns now, returns on equity, that it was producing and earning back in 2007, 2006. So very strong momentum, a bit on the expensive side, not nosebleed so, but moderately at a premium. It trades on a PE basis, on a price-to-book basis. And I think that's totally justified, given all the positives we listed. Should benefit from this overall favorable regulatory environment too. If the CFPB things change, if the Dodd-Frank changes come through. So overall, a very positive story.
Isn't it kind of interesting times that we're in, that we have to convince investors to buy the financials when we have 4% unemployment?
That's right.
You know, and we just had the biggest corporate tax cuts ever, and we're like, buy the banks. We have to convince people. But it is a good story right now, I think. Okay, I brought a story that you also have to convince people, which is on the retail side.
That's right.
I brought PVH, which is ticker PVH. Most people don't know it just by its name, but it is one of the largest retailers in the world. They have Tommy Hilfiger and Calvin Klein are their two big brands, and then they have some heritage brands, is what they call them, that we would know, like older, just brands that everybody owns. But Calvin and Tommy are their big drivers, and those are global brands. People forget that Tommy Hilfiger, for example, is big in China now, and Europe is big in both brands. So they have all that covered. And then there was the concerns about Amazon with all the retailers in 2017, but they have been on Amazon's platform for numerous years. As people know, they sell a lot of underwear, socks, things like that with the Calvin Klein brand especially, and those are all sold on Amazon. Amazon's the largest retailer in the world for those kinds of items. It's the fashion forward, the design items that they're not able to compete as well in. But PVH kind of has the best of both worlds. They can sell their socks on Amazon, and then they can keep the fashion in their brick and mortar stores or online through that method. And it's working well with them. Their same-store sales were very strong for the holiday season, both in North America and in Asia and especially Europe. So it was a really strong quarter they just reported. So I brought the price to consensus chart because you can really see the good guidance that they gave for this next fiscal year. They're going to grow earnings by 13% here. That's pretty stellar for a retailer, which everybody thought was doomed. It was all doom and gloom. But they've been turning it around. As you can see, over the last 2 years, those earnings have been on the rise. And then I brought the shorter term chart here. 2017 is when everybody thought, you know, everything was being Amazon and we'd only shop at Amazon, so the shares bottomed out there. And then 48% tear here. You know, much better than the S&P 500 over this time period. Now, you might look at this and go, well, maybe it's all done. You know, why should I get in here? But it's trading a little over 16 times, which isn't that expensive, especially with this nice growth trajectory that they're giving. And like Comerica, they have a good management team as well that's been in there a long time. They're very skilled at navigating all the ups and downs in the retail market, and especially on apparel. And we might have some trade issues coming up because a lot of apparel is made in China. And then they just have their brands in China as well, so you don't know how all that will play out. But if anyone can navigate it, I like this management team doing that. So a couple good name unknown companies this week, I feel.
Yeah, everybody's chasing the big tech companies. Losing sight of what's happening in consumer and finance and all these years. And we have to be mindful of these companies. There's some hidden gems.
Oh, definitely. Both of these.
Very good.
Okay, that's what we like to bring you here at Zacks every week. For our top stock picks, we bring you those that have the good Zacks rank and that have good earnings outlooks. So again, those two stocks were PVH, which is ticker PVH, and Comerica, which is CMA. We'll be back again next week with some more stock picks. So be sure to check it out on Zacks.com.